Welcome to the Network Effect. Today's guest, we have Sean Tai, who is the Head of Business Development at Ilex. Welcome, Sean.
Thank you, Corey. I'm delighted to be here, and thank you for the opportunity.
Thanks for coming. So, Sean, most of the audience knows who I am at this point. Can you just tell us a little bit about your background and experience in the financial markets?
Sure. So I've been working in banking for about 7 years, working for a group of Australian banks, doing origination, syndicate and sales and structured finance. I did those roles in Sydney and Singapore. And then I've had a fintech career for about almost 25 years as founder and CEO of Debtdomain. I led the business for about 20 years as a bootstrap company, as owned by private equity as well for 5 years, and then as part of IG's market for about 12 months, and I just left before COVID. And the last 2 years I've been sort of looking at the market again and officially joined Ilex last March.
So let's talk about Ilex. What role does Ilex play in the loans market, and how do you see yourselves making an impact?
Right. So Ilex's vision is to deliver a next-gen platform for syndicated loan distribution. That would encompass investor CRM, analytics, distribution platforms, primary, private credit, secondary. We're definitely working towards that. We've developed already the investor CRM and analytics quite well. There's also a secondary marketplace, secondary deal sites, and we're working on primary BSL at the moment. But what's really exciting is a few things. One is the quality of execution. The UI UX looks amazing.
I was going to say I've seen it and it looks absolutely amazing.
Yeah. And also it's also built on data. So all the data elements were there. When we built Debtdomain, it was built mainly for workflow, not for data. So the data elements are there. They integrated with loan connector data, which is pretty amazing to have both the bank's private data plus the purchase data in one place. And to look at the superset and run analysis on the superset of that. And so we were excited by what they had built so far, and then we could extend that in the directions that we both want to go to fully cover the sell-side personas. And then the other side is the philosophy. So, we've agreed together that we're going to run this business for the long term, because that's in our clients' interest. And we're going to invest a large percentage of our revenue in perpetuity, because again, we don't know what new technologies will come down the track. This last year's AI is the new thing. Before that was, maybe cloud computing,
blockchain.
Yeah, exactly.
It's the new buzzword of
but you need money to do things, and if you and also it's continuity of management. If I look at what happened with Debtdomain, every 2 or 3 years we had a different owner, execs would change, and so there'd be a loss in continuity in people that would run the budget for the business. But if you have entrepreneurs that's always in control, then that continuity is there. And if you look at how these family-owned businesses in Germany, Mittelstand, it's the same family running the business for centuries. I think that's a really productive model, because that continuity is there, the motivation to always do better.
Keep the tech up.
There's always constant
making
investment,
sure it's always
constant innovation, and that's and if you look at, you described before how slow the market is to change. You really need continuity when the market is very slow to change. You have to sustain things for decades to do it properly.
Well, things are just outdated, and if you don't keep up with it, then it becomes even more difficult to update it, and then you have other competing techs, and then the market's confused.
So you need a continuity of your CTO, your lead developers, the management team, and I think with them having substantial equity stakes, and them having decades-long careers, then that's going to be good for clients.
Yeah.
And Ilex's vision is to that end. We're in this for the long term. We're not in it for a quick buck. We're not looking to sell the company. It's counterintuitive, but I think this is the best model for our clients, and it's actually what we all agree upon.
It's probably nice and relaxing too.
Yeah. You have to, investors will be happy if we succeed.
Yeah.
But it's more important we succeed, and the natural pace of that is going to be a while.
Yeah.
And the clients, I think, appreciate that.
What are the benefits of starting from scratch versus what some of the other older companies are dealing with?
I guess from starting from scratch, you can obviously control everything, but you then need to raise capital, hire a team, but you've got full control of your product roadmap and how quickly you want to grow and those sorts of things, what your vision is. For me, doing this essentially a second time, I thought by joining a startup, I could expedite the timeline by a number of years. So a startup that has relevant tech in the syndicated loan space, that has a modern tech stack, that has raised more than 10 million of capital, that has dozens of tech people that have proven to deliver. And then if I came and joined that company, I could expedite their client relationships, their product roadmap, and they've obviously got sold products to the banks. They've got vendor approvals, which are very valuable.
Oh,
and
yes.
We're just adding new products underneath that. That's already there. That's a great head start. So time does matter.
Yeah.
And for me, it was an accelerant. But it's important that you do proper due diligence on your business partner on that fintech. And I spoke to about 15 fintechs last year to take a view on which ones we liked and which one were appropriate as a home for us. And given Debtdomain, SyndTrak, these are multi-decade businesses, and so this is longer than many marriages, and so you have to do proper due diligence. So I spoke to a lot of potential candidates, and then chose one after at least 9 months of conversations.
Amazing.
Which I guess is the dating phase.
Well, yeah, I guess in your position, you have that luxury of choosing.
Yeah.
Not that I didn't have that same luxury.
Yeah,
but
yeah.
So the loan industry is obviously extremely manual. Distribution is extremely manual. I do feel like we're starting to feel a little bit of a difference. So what are your thoughts on the future of digitization and how technology is going to impact the future of the loan market?
Yeah. Well, I guess we could look at how it's used today in distribution. So if you look at the term loan B market in the US, the platforms are essentially data rooms, essentially. They, left lead book runners, they don't enter commitments into clients. There's a lot of non-bank participants. And so there's not much book running really. It's just a data room, and they do public-private compliance and NDAs. And that's true to a large degree on the agency side as well. There is some evolution on the agency side with amendment voting or financial monitoring, but not huge workflow. Just it's helpful. In Europe and APAC, they do use the book running functions more. But I think investor CRM has lagged in terms of evolution. It's essentially the same as 15 years ago. And even the book running functions that are used are essentially 15 years old. They work, but they can be a lot better. They're not designed for mobile, for example. So I think there's a long list of improvements that you can make to provide a platform for the 2020s. I have a lot of ideas on that, like 100 plus requirements that would go into a new platform. And just like when we started Debtdomain, we did an evolution on what was in the market at the time, which was Interoperability and SyndTrak. We knew how to do that better, and we delivered on that. And I didn't have the experience today that I had then. I obviously know more. I think I've got a head start this time compared to last time. And last time was not a disaster, so fairly confident. And I think I've got a good story to tell, because I literally tell clients, I really want to make a difference here. We're not going to do a control sale. I think that's a mistake. We're going to retain control and have this as a really long-term innovative company led by entrepreneurs. I think it's really important that a vendor is led almost permanently by entrepreneurs.
Yeah, you talk about this in your paper, which was really interesting.
It's very important, because entrepreneurs are very good at being efficient with capital. They're very good at delivering a product, very quick decision making. It's essentially a one product company if you think about it. Where if you look at where modern platforms are today in the big companies, there's like hundreds of platforms in the same company. Mm-hmm. How do you get the management attention across all these different products and platforms, not just for syndicated loans, but in fixed income or equity capital markets and all the rest? It's a very big focus.
Yeah, and you're talking about individual platforms versus one platform for everything.
Yeah, so the idea is that it's a one platform company.
Yeah.
I think that all the entrepreneur focus on that, you'd have very quick execution. You've got a very defined customer base, basically a ranger and maybe agents. And then you can just move quite quickly in a very focused way.
Yeah, it's actually, so we're obviously cross asset class, but it's one platform. So that is what makes us unique as well, because you can see everything in one spot, which is like unheard of in the loan space.
Yeah.
But agreed. This is a perfect segue into, where do you think the loan market will be in the next 10 years?
Okay, for a 10-year prediction, maybe I'm a little biased, but I would say that you would have best-in-class providers that would, lead the market. So you might have a best-in-class provider for the back office, and then you might have a best-in-class provider for digital documents, and you have a best-in-class provider for agency solutions for the middle office. And then you have a best-in-class provider for the front office focused on distribution. Mm-hmm. And then you, unlike before, you then connect them. So the connection rate amongst the existing platforms globally for the incumbent ones is quite low. It's about 10%. Obviously, it's higher in Term Loan B. If you look at a global average, it's like 1 or 2 integrations in 10% of the client base. That's really low, and it should be close to 100%. And so I think, because these platforms built 10, 20 years ago, not built for, it's hard to integrate, it's expensive, it's slow. But today with microservices, it's a lot cheaper and quicker. The banks are way more focused on data than they used to be. Historically, the solutions were focused on workflow.
Yeah.
And so this shift will, the future will be best-in-class providers, connected and based on data and data flowing between the platforms.
Yeah, and I think, so collaboration is really important to both of our platforms.
Yeah.
So I guess, what are your thoughts on, I guess this is sort of what you were saying, but any other thoughts on interoperability and how important it is to our platforms and to the business and the industry?
Yeah, I think the critical thing is for interoperability is obviously getting the identifiers for the lenders of record, the deal identifiers as well, but that's difficult for legal reasons, because in the US, you have a lot of your 10K filings with the SEC, so a lot of loan agreements are public, like maybe half the market. But with the legal differences outside of North America, those identifiers are not available unless you're in the syndicate. And even that, ISINs are issued in a subset of the leveraged loans, which is probably 5% coverage of all deals issued in EMEA and APAC. So it's still going to be name of the deal and closing date in primary as your identifier, as a default.
Yeah. And what about just overall vendor desire to work together? Because I know there's interoperability from a tech perspective, but then from a relationship perspective, I think hopefully we'll see some shift in that. I mean, I think that we're starting to see that now as well. To your point, best in class for these different genres or areas, and then everyone work together to provide the best tech stack across the industry.
I mean, just reflecting on my own experience, leading Debtdomain for almost 20 years, I had a number of conversations with potential partners. So think a data provider, think a secondary workflow solution. But the actual number of deals done, in terms of collaboration, I think were one in 20 years with one supplier. So it was really low for lots of reasons, partly because we weren't built for data, and also just the difficulty of negotiating some sort of collaboration. I think today it's very different, and it feels different. And I've had lots of discussions with syndicate loan tech companies, and they're much more open to collaboration, and it's a lot easier as well. It's transformed really. It's transformed how that is moving forward.
Yeah.
I mean, for example, you're talking to number 21. That sort of thing was fairly rare historically.
Yeah.
It's building projects together. Yeah.
Yeah, and there are a few other partners that we're talking to as well. So more on that soon.
Yeah. I mean, for us at Ilex, we're having conversations with digital doc providers, with chat tools, and integrating those into the products. We're really interested to connect with Access FinTech. I guess it makes more sense on the agency side, but we're not yet there with our roadmap for agency.
Yeah, as Dylan said on the podcast with Namo 21, there's enough to go around, so it'd be great if everyone did something really well and then we all worked together.
Yeah. I definitely believe a strategy of being a global niche player is the right one. I strongly believe in that. You need to have a fairly narrow, defined scope for your product, and then you can execute well against that.
Putting a million things on your roadmap and not delivering.
Yeah. You don't want to boil the ocean, and also you do need to be global. So if you're going to do something, you need to do it globally. You think about your clients like HSBC, Deutsche Bank, Citi, they operate in 2 or 3 regions.
Yeah.
You can't just, look at 1 or 2.
Yeah. What do you think are the biggest challenges currently in the loan market, and how is Ilex addressing them?
The challenges. So
We don't have that much time, but top 5. No, I'm just kidding.
challenges in the loan market. I guess the loan market is very slow to change.
Mm-hmm.
You have to recognize that, and it's not your fault. If you as a vendor, you want to move things forward, you've got your targets to meet, but you can't. There's a natural rate in which the market can change. If you try and push it harder than it can do, it's going to push back against you. You're just going to expend resources or burns people's relationships. So it's important to be very patient.
Mm-hmm.
And a slow approach is actually, I think, the righter one. So you need to introduce tech in a place. It may not be a major hub. It might be somewhere further afield. You get them to give feedback on it, adopt it, and then you keep going. But to go, I think, with new tech into a London or New York situation, I think is extremely difficult.
Yeah.
So when we started Debtdomain, we introduced tech in Sydney, where I'm from. That was our first use case. And the banks there, just 4 of them, one of them can move forward. One of them controls a quarter of the market. You don't find one bank in London controlling a quarter of the market. Mm-hmm. So it's a lot easier in those sorts of places to start. And Ilex actually plays to that because they started not in London, not in New York, but actually in Singapore. So again, that made sense to me because you can actually get approvals tend to be quicker, their requirements tend to be less complicated. So it's easier to adopt in places like that.
Yeah, and then we all just need a Wendy Rhodes to teach us patience.
Yeah. You definitely need to be patient. And I guess this plays well to what I consider a bootstrap approach. So at Debtdomain, we did not raise a lot of capital, surprising us, under 2 million in more than a decade. And so
wow.
It's not, and competitors had giant purse strings. It's important to have a small number of people that are highly motivated with ownership stakes, and they can really focus on pleasing and delighting clients. And you can do that quite cheaply with that sort of motivation. I strongly believe that a few people can make a massive difference.
Mm-hmm.
So in terms of the people that make a difference, I mean, in looking at a number of fintechs in syndicated loans last year, I was very impressed by NAMI21, what Samira's built. And I definitely think she's going to be a major part of the future ecosystem. And
Huge
again, she's a subject matter expert. I was like SMEs.
Yeah.
That's 25 years experience. You can't find that in many places.
Mm-hmm.
Another one would be, I think we looked at Noniro. I mean, what they built as a back office system with things around it, around lender and borrower communications, is an excellent product. So this. There are these individuals that are really innovating, and they are SMEs.
I think it does make a difference when there's an SME.
Yeah.
You can see the difference. You can hear the difference just when people talk about their products. Someone who's actually lived it has the scars, and someone who just learned about it secondhand, for sure.
Yeah, or just listening to clients over 3 or 4 years. You don't truly understand.
Yeah,
You need to have the decades of scars, and then you really understand how everything connects. What you can implement, and what the banks are so complicated. Mm-hmm. And I remember just having conversations around, we have to comply with EU competition law about note taking, or we have to, store data in a certain way to comply with certain country requirements. To get these solutions into a client, the number of things you have to go through, your vendor approval. You might be doing it in the US market, but in Europe, which is way more complicated, it's not one country. It's not one country. The legal requirements are higher. UK is kind of ring fencing itself, and you have to go through all this. InfoSec is a huge thing now, but we've got that experience before, and we're building a lot of these requirements straight into the product from our previous experience. Before things came to us bit by bit, we had to just sort of retrofit that in. But knowing what those requirements are on day one, we can plan for the future in a new platform.
Yeah. So as a founder and someone who started business or two. What would you say are lessons learned or things you would convey to anyone looking to do the same?
Okay, for a founder role, you have to be positive. That's definitely required, even if there will be disappointments, and you have to stay positive.
It's a roller coaster for
yeah,
sure.
Yeah, and then the other part is I think is really important is resilience, and related to that is also, as I said before, patience. Client-centric, of course. Believe in yourself, and you bring your team with you. If you show the confidence and show some track record with clients, people will follow you. I've also be prepared to move. I've had to move from Sydney to Singapore to London to Toronto and back, and I was basically following the business. So you need to do what it takes, even if you don't want to leave a lovely place like Sydney. You recognise it's like 1% of syndicated loan volume, and you've got to move somewhere where there's more liquidity. I'm here in London because it connects 3 regions. So APAC is connected to London, as is the US. It connects to Africa as well. The weather's terrible, taxes are high, but it's a major source of liquidity. There's a whole ecosystem in London where there's lawyers, where there's InfoSec, that enables you to do things, or conferences.
Well, and that's small compared to New York even.
Well, New York is obviously a larger market because obviously the volumes are higher, but it's not really looking outside the US too much, where London has to, and it does.
That's a good point.
And also, New York doesn't connect with APAC much, but London does through history and time zones.